Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top stories that we're tracking for you this morning. We're going to get to all of those in just a bit, but as always, let's quickly take you through what's happening as far as the global markets go. We did get another positive handover from Wall Street, and on the back of that, you have Asia also opening with good gains. Hang Seng is definitely leading the gains this morning. Up on your screen right now, it's over 200 points in the green, 230 points to be precise, and it is a 1.2% gain that we're seeing for the Hong Kong markets. All other Asian markets that are trading are also doing well. Remember, the Korean and Taiwanese markets are shut today, so those ones are not trading. But for everything else, we're seeing good gains come through. So the Straits is up 0.7%. You have the Nikkei markets, Shanghai, all of them seeing gains of around 0.3% right now. So that's what's going on in Asia. Let's also bring the SGX Nifty up for you now, because that is indicating that we're going to get a good start for our own markets. It's around 80 points higher right now for the SGX Nifty. Let's also move on and talk about the US markets then. Wall Street ended Thursday's trading session higher, so the Dow Jones closed almost 200 points in the green. The S&P 500 and the Nasdaq also did quite well. They were both up around 0.6%. CNBC's Kate Rogers is here with a wrap of all of that action from Wall Street.
Stocks finished the day higher in a volatile session as Wall Street weighed Fed Chair Powell's comments on signaling future rate hikes. He said the Fed will vow to raise rates to fight inflation, quote, until the job is done. The Dow finished higher, up about 0.6%, a similar gain for the S&P and for the Nasdaq, with all the major indices on pace to snap a 3-week losing streak. GM unveiling a new electric vehicle today. The Chevy Equinox EV is scheduled to go on sale next fall and start at around $30,000. GM hopes the lower price tag will help the crossover become a high-volume seller as it makes the move to go all-electric by 2035. The news comes on the same day Rivian Automotive announced it was planning a joint venture to build electric commercial vans with Mercedes. That sent shares of Rivian up nearly 11% today. That's the action from the U.S. market. Back to you in Mumbai.
All right, Kate, thanks a lot for getting us all of that action from Wall Street. Now onto a big cue for the markets. Federal Reserve Chair Jerome Powell on Thursday emphasized the importance of reining in inflation before the public gets used to higher prices. Remember, this is the Fed's last scheduled public appearance before the FOMC meeting later this month, so it is important to watch. Let's listen in to what he had to say at that event.
Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time. That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. It is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done.
All right, Fed Chair Jerome Powell once again sort of reiterating that the Fed will keep at it till they're able to rein in inflation. But that's what's happening as far as the U.S. markets and Wall Street go. Let's also bring you the final update of our global market wrap. This is from the European markets, of course, and they ended Thursday's trading session quite mixed. The French CAC index saw a gain of around 20 points. The German DAX was around 11 points lower at the close, and the FTSE saw a gain of 24 points. Now, the European Central Bank announced a 75 basis points interest rate hike. The central bank added that they expect to raise rates further because inflation remains too high and is likely to stay above target for an extended period of time. CNBC's Sylvia Amaro gets us up to speed with all of the details.
75 basis point hike. This is a historic moment for the ECB, the biggest ever increase in interest rates under Christine Lagarde. And it's important to keep in mind, though, that this was a unanimous decision. So even the dovish members of the European Central Bank agreed to go ahead with this big increase in interest rates. And why? Because all of them are concerned about inflation, and they have reasons to be concerned. If we take a quick look at some of the forecasts from the ECB in terms of inflation, in June, just 3 months ago, they were expecting inflation at the end of this year to sit at around 6%. They now expect that to be above 8%. So the outlook for inflation has worsened, and therefore we're seeing the ECB taking a big move here by increasing interest rates by 75 basis points. Now let's take a look at what else the president of the European Central Bank had to say yesterday.
We didn't say that we would raise interest rates at 75% as if 75 was the norm. It is not. we will determine, meeting by meeting, on the basis of data, how we reach to that level of interest which will actually return us to the 2% target in the medium term.
So 75 basis points is not the norm, according to Christine Lagarde, but she also said that the ECB is going to come up with more interest rate increases in the coming months.
What we know is that we want to get to that 2% medium-term target, and we will take the necessary steps along the way in order to get there. We think that it will take several meetings. Now, some people will say, how many is several? Well, it's probably more than 2, including this one, but it's probably also going to be less than 5. Now, I leave it to you to decide whether it's going to be 2, 3, or 4.
All right, so that is the ECB decision. Sylvia, thanks a lot for getting us that. So they are going to work towards that 2% inflation target, but 75 basis points is definitely not the norm. With that, let's move on and bring you some somber news which comes through this morning. The world's longest reigning monarch, the United Kingdom's Queen Elizabeth II, passed away last evening at the age of 96 after ruling over the country for a period of 70 years. Sanjay Suri is joining us live now from outside Buckingham Palace. Sanjay, she leaves behind a 70-year-long legacy.
Well, this is actually quite a unique event. While we mourn the passing, do consider this period of 70 years. This is something Britain knows that almost no other country knows. She has represented a continuing symbolic presence almost since the end of the Second World War. And that is when a whole era ended for Britain. And then on, she married in 1947. It was in 52 that she became queen, and the coronation followed in 53. So ever since then, ever since that change of the world for Britain, she has continued to remain. There's no other country that really has such a continuing presence at the top. India, of course, keeps electing prime ministers, keeps appointing presidents. There's a change every few years. Here we have a single monarch continuing through this period. This has been a tumultuous period. You had the Suez crisis when Britain sought to revive its Second World War glory and attacked and failed desperately. We had difficulties in the 60s, economic crisis, the coal mines strikes that went on and on, power cuts that really almost crippled the country. Then EU, getting into EU, the controversy over that, getting out of it, the Iraq war, so much has changed. It has been really tumultuous, and not forgetting the bloody conflict in Northern Ireland. She has seen through all that. Her presence, the sheer presence for that long, has been a very stabilizing factor for this country, and her passing marks the end of that era. And then when we speak of the end of an era, we're not just speaking metaphorically. It truly is the end of a long era.
Oh, absolutely, Sanjay. Thanks a lot for taking us through that entire journey as we mourn the passing of Queen Elizabeth II. May she rest in peace. Hey guys, welcome back. You're still tuned into Power Breakfast, and let's now bring in our research team to fill you in with all of the cues that you should track as we get into a fresh trading session. We have Sonal and Mangalam both joining us now for exactly that. Guys, a very good morning. And Sonal, let me come across to you first. The global cues once again look quite supportive.
Yes, they do. So that indicates that for our own markets, it could be another day of greens as far as market moves are concerned. US markets, they closed higher despite hawkish comments coming in from Fed Chair Powell. This was all about inflation as far as global market commentary is concerned. And that takes me to European markets, because there as well, we saw markets closing largely in the green. And this despite the fact that ECB went ahead and raised rates by 75 basis points. They've cut growth forecast as well. And they said that if needed, rates will be hiked even further. So inflation and curbing inflation was all about the global markets this time around. Asian markets, they are largely higher in trade today, but we have South Korean markets and Taiwanese markets which are shut today. So lesser cues coming in from there, but the Hang Seng is up 320 points as we speak. Chinese inflation data has come out, which is coming at 2.5% versus a Reuters poll of 2.8% on a YOY basis for the month of August. SGX Nifty, considering the cues from the global markets that we are getting, is indicating indicating that this day again could be a very strong day for our own markets. It is indicating an uptick of 87 points. As far as our own markets are concerned, well, yesterday Nifty consolidated in a narrow range, but it did see a gap up opening and it closed higher by almost 1%, up around 175 points. And it was Bank Nifty that really led the gains in yesterday's trading session. The 20 DMA is a support now for the Nifty at 17,651. So that is the level that we'll be watching out for. FIIs, they've pumped in more money. Around 2,900 crore rupees is what the FII buying figure is. DIIs, however, net sold 213 crores in cash market yesterday. So far, in last 40 days, FIIs have net bought of around more than 20,000 crore rupees. So a lot of optimism, at least in the cash market, is coming in from the FIIs itself.
All right, Sonal, thanks a lot for taking us through all of those cues. We're bracing ourselves for a good start, and then let's see how the trading day moves from there. But Sonal, also take us through some of the individual stocks that we should keep on our radar today.
Well, there are not many, but some of them that I could identify, Pavitra. Let me start with Samvardhan Motherson Motors, which was in focus because they will be buying frame manufacturing assembly operations of Daimler. So India, that stock remains in focus. In FY22, this particular unit did revenues of around 300 crore rupees, so that stays in focus. M&M is saying that for the new launch, bookings of electric XUV 400 will be starting in January. So, of course, that big launch is something that the street will be watching out for. NTPC has said that they have entered into an agreement to supply renewable energy to armed forces, a big focus coming into renewable energy arm from NTPC. And Mint is reporting that hotels, tourism may get trade incentives. If that does happen, it will be a big relief for all these companies. So Indian hotels, specialty restaurants, all of them will be in focus today.
All right, we're going to watch out for these stocks. Sonal, thanks a lot for that. Finally, let's also bring Mangalam in now. He's tracking all of the cues from the futures and options space. Mangalam, yesterday was definitely good. How's it looking today?
Well, today it's looking even better if yesterday was good, because the bulls are in complete control. From last week's low of 166 odd, the Nifty has rallied almost 700 points. So that's the kind of move that we're seeing. Yesterday, the Nifty Bank led the gains, but importantly, FII flows, which were meandering a little in the past, have now come back with full force, close to around 2,900 crore worth purchase. The DIIs selling 213 crores still meant that the net inflows were around 2,700 odd crores. Importantly, after a few days of unwinding positions or hedging positions in index futures, the FIIs went ahead and bought 853 crores in index futures as well. A large part of that was fresh long addition, but some part of that was also covering 2,500 short positions. Importantly, the Nifty saw some unwinding of positions, whereas the Nifty Bank open interest was up 8.8%, telling you that there were a lot more longs added on the Nifty Bank itself. Now, it's interesting that the Nifty is so close to its all-time high, and the FII short positioning is still 76%, telling you that if we sustain at higher levels, maybe at some point these shorts will have to go cover their positions. Importantly, we're seeing some action at the 18,000 call, 17,800 call and 17,800 put have together been extremely active with a premium of almost 300 points. So the street is believing 17,500 to 17,600 would be a strong support at the lower level, whereas levels upwards of 18,000 and 18,100 is something that we are eyeing. At the lower level, the one mark that we'll be watching out for is the 20-day moving average, 17,651. But importantly, also note that now that the SGX Nifty is indicating a gap up of almost 90 points, what happens? Because in mid-August, August 17, August 18, as well as August 19, we saw the Nifty retrace from levels just shy of that 18,000 mark. So that is something we'll be watching out for too.
All right, we're going to watch out for that. Mangalam as well as Sonal, thank you very much for joining us and taking us through the trade setup as we get into a fresh trading session. With that, it's time for another short break in the show. But when we come back, we shift our focus from equities to the world of commodities. We'll fill you in with what's going on in just a bit. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. And as promised, let's talk about the world of commodities now. Manisha Gupta joins us with a quick update. Manisha, good morning. What are you tracking today?
Well, I'm looking at the metal prices, Pavitra, and we've seen a very smart rebound into this one. So whether it is steel or iron ore, the prices which have actually run up after China is talking about going back to building the stalled housing projects there. That means the demand for construction metals will gain up. The other metal that I'm keeping an eye on is copper, where the prices surged by 2.5% overnight. The workers at Chile's Escondida have voted for a strike, and the workers will partially stop work in the next week and shut it down completely by the end of September. And Escondida, by the way, is the world's largest copper mine, so that premium is into the prices. Strength is what you have seen in the crude oil prices also right now. So if it's off the 7-month lows, Russia threatening to halt oil and gas exports to some of its buyers is something that seems to be adding premium to prices. Also, after that sharp sell-off that we've seen in crude prices in last week, it has been oversold, and there is some speculative buying positions also being built.
All right, Manisha, thanks a lot for bringing us that quick update from the commodity markets. But staying with commodities, let's also talk about the energy space. And here's some important opinion coming in on crude and gas prices from RBC Capital Markets' Helima Croft. Listen in.
The natural gas story remains, I think, the most important economic story because Europe is really facing a serious economic crisis. If Vladimir Putin makes good on his threats to basically shut off Europe in terms of gas supplies, it's going to be challenging for these countries to make it through winter if it is a cold winter. So I do think that Vladimir Putin is playing a very serious game of brinkmanship with Europe on natural gas. You know, market participants are very concerned about recession. They're looking at the China story with continued COVID lockdowns, weak economic data, and they're basically saying the outlook on the demand side may not be great. The supply picture, we have this U.S. SPR release. It's going to be winding down. The question is, come December 5, are we going to have serious economic sanctions that pull Russian barrels off the market? We had this OPEC meeting on Monday. They did this micro cut, but they said, look, we're willing to do more. We stand ready. Will Saudi Arabia essentially do a massive short squeeze if they see prices moving further down? I think OPEC is a very important wild card to pay attention to.
All right, so that is some important opinion coming in. With that, we're completely out of time on this edition of Power Breakfast. Asia is all higher, led by gains seen in the Hong Kong market, which is up nearly 2% right now. So do keep your eye out on that one. And the SGX Nifty also suggesting a gap up start. It's currently 90 points higher on the SGX Nifty. So on that positive note, we're going to wind down. Thanks a lot for tuning in, and Bazaar will take all of this action forward.